everyone, and welcome to TBR's Thought Leadership webinar on the market disruptor, Huawei. My name is Allison Crawford, and I will be your host for today's session. TBR's focus is to provide business research to accelerate our customers' success, and the networking and mobility team believe it is imperative that our clients understand the strategy and roadmap of this Chinese juggernaut to maintain a competitive position in the market. We've been following the firm for nearly 10 years, and passing along our understanding of how they are maneuvering, our clients will be able to make both defensive and offensive go-to-market plans to reduce the impact Huawei will have on their business. Before I hand this over to Chris, there are a few action items I'd like to cover with you. First, we will be recording today's session and posting it on our YouTube site, TRI channel. We encourage you to visit our channel to watch this presentation or any of the others we've posted. We'd like to hear your opinions and thoughts on the materials we're presenting. Send any questions or comments to the Q&A chat function. Chris will address them at the end of the presentation. Or, if you'd like to set up an inquiry for additional discussion about Huawei, please reach out to Chris directly at the end of the webinar. We'll send the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides as well as our thought leadership pieces, other webinars, decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. Let me introduce Chris Antlitz, analyst on the networking and mobility team here at TBR. Chris has been covering the telecom infrastructure services market for the past 5 years and guides the research on our TIS benchmark. He has taken particular interest in Huawei's performance and has developed a keen insight into what the Chinese vendor will do next. In 85 minutes, Chris will impart that insight onto you and welcomes the opportunity to help you respond to this market dynamic. So with that, let me hand this over to Chris.
Great, Allison. Welcome. So, a few months ago, Huawei came out and said that they have this goal, and that goes to achieve $100 billion in revenue by 2020. So the company made over $31 billion in revenue last year. So to get to that goal, they'd have to grow at a 14% CAGR through 2020. So in this presentation, we're going to look at each of Huawei's 3 business segments, which are carrier networks, which includes their telecom infrastructure, service, and software business. We're going to look at their enterprise networking business, and we're going to look at their mobile device business and the strategies and the positioning that they are doing now to be prepared to get to that and support that growth. So with the enterprise sector, look at 3 key tenets of their strategy. First being leverage pricing advantage. Secondly, geographic expansion, and third is the channel. Look at the telecom equipment space, where growth has slowed. In the last 6 months, it's slowed dramatically from the growth rates that they're accustomed to. We're going to talk about what they're doing in managed services and how that's a key focus going forward to get that rate up again in the comm space. And third, we'll look at how Android is going to help Huawei. Merging Android with Huawei's manufacturing capabilities is going to help them become a top 5 player in the global mobile device market. Enterprise strategy. So this is an overview of their network enterprise. Huawei is a newcomer to this market. They entered formally in 2010. The first year of business, they achieved $863 million in revenue. And the next year, they almost doubled that to $1.4 billion. Growth rates of $2.7 billion and $4.9 billion in 2012 and 2013. Contract sales. Huawei has a target for $7 billion this year and $15 billion in 2015. Now, contract sales is the number that you folks will probably see most of in the press. It makes Huawei look bigger than they really are. The keep in mind that there's two sets of numbers here that Huawei puts out. The set of numbers is what they actually made in revenue, which is the 863 and 1.4 billion, and now contract sales, which is business that they've booked, but don't collect that money over several years. Like they are business, but they're not actually recognizing that revenue, until the contract is completed, but they're booking it. So the difference there. And just a little about what they're doing in enterprise, strategic initiatives, alliances, acquisitions. They bought out tech of the joint venture they had with them. That gives some security, server, and storage business that complements their existing enterprise portfolio. We've been doing a little bit in enterprise cloud. They've been doing security as a service, doing data center data from their clients, some other things they're doing in cloud that is aligning to their the hardware play that they have as well. So of what strategies leverage pricing advantage. Now this is something that the company is adopting from their Telecom business, which that proved very successful for them. What has in their manufacturing, they're not weighed down by legacy labor costs like some of the incumbents are, particularly high labor markets like Europe. Huawei is able to achieve higher margins and products at a much lower price. They have those advantages in their manufacturing process. So they're going to do some very similar in enterprise that they've done in telecom, which is come in at a much lower price point than incumbents are charging, and they want to get market share. So I have here on the bottom that shows Cisco and Juniper's gross margins for the last year. And you'll notice that they consistently attain gross margins above 60%. And all operating margins they get, around 20%. Cisco just yesterday reported earnings. They got 22% operating margin on their business, which is 80% hardware. So it shows that these are able to and enjoying very good returns on the equipment that they're selling. So what we want to do is come in at a much lower price point, and we have room for them to come in and come in at a lower price point, but still get a very good margin. So if they came in and got 10% operating margin, which was half of what Cisco's getting, they're a very good value proposition and some business there. Maybe unseat some from client accounts. So there's a big focus on the small, medium-sized business market for Huawei. That market, with their strategy, because then mass produce their boxes and flood market with these boxes. So like Wi-Fi terminals, LAN equipment, cables, etc. Can come in and at a lower price, and they can leverage their manufacturing case there. The second of Huawei's enterprise networking strategy is geographic expansion. So a majority of their revenue in the last 2 years has been centered in APAC for enterprise. But the company is made aggressive investments this year to position for growth forward. So what have they done? Well, they doubled their enterprise workforce this year from 10,000 to 20,000 people, and much of that hiring has been in Europe and the Middle East. Sales and R&D functions. Another thing they're doing is channel partners. Huawei wants to do 100% price sales through the channel within 3 to 5 years. Currently, they're doing a mix of direct sales and channel because they're still trying to build up their channel, get more channel partners to get them exposure to more of the geographies, and that's a process because they need to come in, they need to negotiate with them, sign contracts, and they start getting equipment into these into those inventories. Channel, and this is key for them in enterprise. A list of 6 channel partners that they've signed up in the last year. I have a mix. You have United Kingdom represented, South Africa, and United States. 100% of their revenue comes through the channel within 3 to 5 years. And how are we getting these channel partners on board? Because most market is controlled by Cisco, Juniper. I mean, those 3 companies alone account for more than 2/3 of the market in enterprise networking. Huawei really is coming up against some strong competition. So what they're doing is offering very attractive sign-on bonuses, very attractive incentive plans, profit sharing, extra bonuses if you sell a certain amount of volume within a certain time frame. Now, Huawei is okay with giving up a little bit of the profit to the channel because they have the market share, and that's what they want. And if they need to take a hit on the margin initially, and they have been doing that. But channel, where is the value add for them? Well, they're getting a sweet deal because not only are they getting incentives and selling the equipment, they're also going to be doing some of the services around the Huawei equipment. So things like the network deployment, this integration, etc. Whereas Huawei is going to support that by leveraging their existing assets in Telecom. Actually, they provide tech support and some managed services remotely from their global network operations centers. Telecom infrastructure. The CareWorks business for Huawei is 3/4 of their total revenue this year. So this is still their core business, but this is slowing. And we all know that operator CapEx budgets leave much to be desired. Operators are doing some projects, pushing projects out, scaling them down to capital. Huawei is immune from this. We've seen that now in their results in the first half of this year. Their growth went double digits down to 5% year-over-year growth. So a marked decline in growth of them. So here, well, there's a few that they're doing. Market share remains the key in their strategy. Continue to be aggressive on pricing, but we started to see them ease up on price some instances. So, for example, we have had some instances where Huawei has sold, so their access network technology, at a price more in line with industry averages. I feel that in certain instances, in certain geographies, Huawei is getting comfortable and more confident in their position. They are now able to raise prices up from what had been, and their customers are going to pay those prices because Huawei is now the dominant player in some of those markets. Growth going forward in the carrier networks business, we see this growing at 5% this year, and it's going to continue growing at a low single-digit rate through 2020. So this business, while it's low for Huawei right now, we look out to 2020, this business will be on the 1/3 of their overall business because as networking and handsets, those businesses are growing at a very fast pace. It will comprise a larger and larger percent of their overall revenue mix. Here's a list of Huawei's customers within the top 50 telecom operators globally. Notice the company is very well represented across all geographies. In North America, where Huawei is very big, in Canada. In the U.S., there's still experience issues I'm sure some of you have seen the 60 Minutes segment highlighting Huawei still running up against in the U.S. with the U.S. government. Things will not subside anytime soon. So the company is really positioning with, in Europe is their big focus right now, and getting into new accounts, particularly in West Europe, where they have a pretty small presence right now, and the incumbents are still very strong. Huawei is making very good inroads there. Companies like British Telecom, Vodafone, Telefonica, etc. This is a business that is growing very well for Huawei. We have growth rates in the chart on the bottom right-hand corner. Growth is slowing in this business, but it's still going at a double-digit clip. Huawei has over 240 managed services contracts, and they continue to penetrate new markets, especially in Europe. And I want to highlight two of those contracts in Europe. One they signed in the United Kingdom with Telefonica in May. Another one they signed with Sunrise Telecom in Switzerland in June. In these instances, these are multi-year contracts, firmly embed Huawei within the operations of these operators' networks. So this gives Huawei a good position to upsell, cross-sell these customers into other products and services and software. Nokia and Alcatel-Lucent, both those companies are going through big restructuring programs right now. And common between the two of them is they're de-emphasizing, in some cases completely exiting, maintenance and field operations contracts. Typically contracts that are very labor-intensive and don't leverage their remote delivery resources. So this business is very low margin. In some cases, companies are losing money putting this business. For Huawei, they don't mind that as much. They want the market share, and we expect to see them start to take over some of the contracts that Alcatel-Lucent and Nokia Siemens are letting go of as they focus on more of the higher margin business. Going forward, we definitely expect Huawei to be aggressive on adding to their field maintenance, field operations. Those types of services will be strong growers for the company. The mobile devices. So Huawei wants to bring unsubsidized smartphones between $100 and $200. Now, this is going to help them appeal to the mass market. So if you look at the smartphone market right now, you have premium devices that drive the market. So things like Apple's iPhone and Samsung's Galaxy Tab. Those are high-end premium devices that are, you're looking at $500, $600, $700 per unit unsubsidized. Well, I'm always thinking, well, hey, we can Android, which is a free operating system, and can leverage our manufacturing capabilities. And between the two, we can offer consumers pretty good smartphones with decent quality and pretty good feature sets, price point that is much lower than the current array of smartphone vendors. So this Huawei really penetrate emerging markets by bringing in a device between $100 and $200 price point. They, consumers in many more of these markets are going to be able to afford a smartphone. And operators are going to want this because they want more smartphones within their subscriber bases, and they want to accelerate that penetration of smartphones within their subscriber bases. So we're seeing them be more to partnering with Huawei and carry their devices. So this is really working out well for the company. Some results, some figures here. Huawei sold 55 million phones in 2011. That puts them as the 6th largest handset manufacturer in the world. And they jumped 3 places from 2010. Very good growth for them in mobile devices. We expect to see very strong gains in both unit revenue. Company. They're going to continue to focus on expanding their channel to more Tier 1 operators and their brand recognition in developed markets. We'll open it up for questions.
Great, thanks, Chris. The first question we have that came through, are you anticipating a move by Huawei to general CE for mobile devices?
General what?
The question is, I'm assuming it's Chevy is Huawei to general CE for mobile devices. No, hold on.
Okay.
Thanks.
Okay, can you restate the question, please?
So the question again is, are you anticipating a move by Huawei to general consumer electronics for mobile devices?
Oh, extent, they're definitely moving into tablets, tinkering with things like TVs, smart TVs. They're tinkering with home networking equipment, which consumers will be purchasing. So there are some areas they are looking at with respect to PCs, and so those areas, not as much. I don't think they're going to be making a big play in those areas.
Okay. Next question we had come through is, do you think Huawei will be able to penetrate the U.S. enterprise market given the government stance on the company?
Yeah, so 3 different businesses. The telecom infrastructure, they don't see them getting in the U.S. anytime soon. They have had some of their equipment installed in prior years. Clearwire, some of their network is built on Huawei equipment. And then there's a few other Tier 2, Tier 3 operators that use Huawei equipment. We don't expect that to, and in many cases, I think operators are going to be trying to get Huawei's equipment out of their networks in the U.S. But if we look at their other 2 businesses, if we look at enterprise, I think Huawei will be able to get into the U.S. By going through the channel and talking SMB. I think they're going to be able to fly under the radar from the U.S. government. However, with the large prize, I don't think that the government will let them sell equipment to enterprise. So, like, for instance, ExxonMobil. Let's say they need to install big back office communications infrastructure, and they're looking for vendors to install this and support network. Those type cases where you have a company, a multinational corporation that is strategic to the country, I don't think that the government's going to let that go through. But that should be fine. And then on the third business, the mobile devices, Huawei's already selling mobile devices in the United States. Metro PDS carries Huawei devices. There's a few other operators in the U.S. that carry Huawei devices, and they've had decent shipment rates so far. So consumers are attracted to the subsidized Huawei device is free. So if a consumer's coming in saying, I want a smartphone, I don't want to pay $300 for an iPhone, and we have this Huawei device that runs Android and that has pretty decent feature set, free, that'd be compelling. And Huawei's had some success there.
Okay, next question we've had come through is the focus of their mobile strategy on handsets mainly, or do they plan to address wireless infrastructure, i.e. base stations, as well?
Huawei is in base stations. That's actually most of their business is network, an end-to-end portfolio of wireless and fixed technologies. So do everything from RAN to the backhaul to the transport layer, all that. They have end-to-end solutions across all generations of technology, all the way from GSM up to through LTE.
Questions come through. If anyone else would like to put them through, please do so now. The question I had is, what assumptions did you make when creating the revenue growth forecast for Huawei?
Yeah, how do we get to those growth rates to get them up to that for 2020? Well, there's a few assumptions baked into that. Excuse me. If a shock to the system, so say if there's another recession like we had in 2008 and if something happens in Europe for our sake, that will to not make their revenue target. I mean, the assumptions we put into that model is consistent growth on a global basis. It assumes that Huawei gets market share from incumbents in enterprise networking. So Huawei must take market share from Cisco and make their market share goal. So, knowing that these strategies work as well as they have in the telecom space, and barring an unforeseen economic issue, we feel that yes, Huawei can attain that sales.
The next question that came through, with the realization of Huawei's bidding strategies, do you see margins in the service provider network equipment provider market improving overall, or does ZTE's presence keep the rivalry level high?
Interesting you mentioned ZTE, because anybody looked at their earnings release a few weeks ago, that company got hit really hard. There's a huge decline in their margins. They lost hundreds of millions of dollars. They're going through a pretty big restructuring program right now. I mean, we're hearing things, their executives are taking a 50% pay cut to get that company back on track. So ZTE is hit very hard. So I think that the company needs to rationalize their portfolio. I think exit some unprofitable businesses. They're clearly not able to compete on the level Huawei is. They have the scale. They don't have the install base that Huawei has right now. So I think ZTE is in big trouble. I encourage people to go and read their earnings release and see what's going on at that company, because that would probably affect some strategies, I'd say.
The last question we had that has come through, will Huawei's position in telecom help IT in the enterprise space?
Huawei has global network operation centers that they use to provide remote services to their operator customers, so things like fault management, alarm monitoring, remote tech support. Services are going to be leveraged in enterprise, so they'll be supporting the channel with remote tech support. The model is very similar to what Cisco does, and that's what they're trying to do. They're trying to mimic the successful channel approach that Cisco and IBM have. And Huawei, they already have a lot of these resources in place. They already have expertise providing these services remotely. So this is, an ancillary business, but they can quickly leverage those assets to support enterprise base.
Another question come through. How robust/stable are Huawei's enterprise platforms? There have reports of serious vulnerabilities in VRP on low-end consumer routers. It's not clear if it is the same VRP OS used on the enterprise gear.
Yeah, so Huawei has had some hiccups on the way, no question. Some of their equipment has been challenged, let's say. However, the company is made very good progress. If what happened in telecom, a decade ago, what was in telecom, they were a nobody, and they made equipment that, very good quality, didn't have the cutting edge technologies in it. In that market, they threw a lot of money at R&D. They learned from their mistakes. They execute very quickly, and now they are putting out some very competitive edge technologies in telecom. And so for enterprise, they're going to do the same exact thing. They're throwing a lot of money at this. They're throwing a lot of people at this. They have a problem. That's what they do. They throw a lot of money. They throw a lot of people at it to get a solution quickly. And, they learn from their mistakes quickly. They're nimble, and they're nimble. So as they've had in the past, I would say those are going to be addressed very quickly, and will start to improve.
Do we have any more questions from the audience? So what I'd like to do is thank you, Chris, for your presentation. Thanks, everyone, for joining the call today. We've enjoyed this discussion and all of your questions, and we look forward to continuing the dialogue with you on Huawei. Couple things before you go. We'd like to encourage you to follow both Chris as well as TBR on the Twitter handles listed here. We've also provided both the YouTube channel as well as the SlideShare channel that we're uploading all of the presentations that TBR does, so you can go and look and see if there's information that you'd like to review, and then you can reach out directly to Chris at his email address here with any additional conversations around this presentation or any of the others that we have posted. We'll have a chat function open for another couple of minutes in case anybody has any last-minute questions. Otherwise, we look forward to speaking with you guys all again soon. Great afternoon.